As you know, our entry model is only going to be touched on this video. We're only going to be analyzing using our entry model, meaning that we already know what is the momentum of the upcoming week based on fundamental analysis of the preceding week and financial data that we have observed. Of course, looking at the United States fundamental analysis focusing on political events, the upcoming political events, the preceding political events, and the economical data that is coming on the next week. Of course, looking at the statistics that affected particular economical data. Typical example, the NFP, what affect the NFP, what was the numbers of the previous week, what the numbers we normally expect this time of particular year, and look at the seasonality, correlating it with the upcoming NFP, and after we have a deduction, and then we come out with a concrete answer towards which direction is more likely to play out, but not undermining the opposite direction, because markets cannot 100% be certain of the direction, but however you can be able to analyze and thereafter have a probability of the direction. All right, so that if the direction doesn't play out, you do not have multiple entries in the wrong direction and you end up blowing your account. So you must always, at your psychological level, have the alternative plan. If the market goes in the opposite direction, how are you going to maximize your profit with that different direction? Of course, that will be caused by the fundamentals, because fundamentals are moving the momentum of the market. That's why 80% is based on fundamental, which is a momentum shift, and 20% is just the entry model, which is the best risk mitigating method. Of course, with years of backtesting data, and we know exactly how to place our stop loss and how to place our entry based on this model. With further ado, let's go to the chart and let's first denote our price flow and price ceilings. So you can see price flow and price ceilings of the market, gold chart, and then thereafter our price flow price ceilings will indicate our price clutters. As you can see, we have indicated our price clutter, and thereafter we look at the two highest point of the price flows and price ceilings, and then we place our construction level, construction zone, equilibrium level, expansion zone, and expansion level. All right, thereafter we denote our dumping zone and collecting zone. With that being said, and then we look for appreciation level and depreciation level, which is the two price ceilings and price flows of the last market day, and then we denote our price appreciation and price depreciation. All right, so the next thing is to see, based on our model, what step that we need to follow first. We look at this and we see that you have a big collecting zone towards the downward direction, so there's a possibility that the market will break the price depreciation and go to price expansion level, retrace, and go to price clutter, take all the price mitigating this collecting zone. And once it mitigated the collecting zone, it will be focusing on these two price clutters. As soon as it mitigates these two price clutters, and thereafter we assess that the possibility will be seeing a market shift. Of course, that will be based on fundamental data, right? So our plan is to look at appreciation level, the price. If it breaks the appreciation level, test the dumping zone and correct to the downside, retrace and give us another appreciation level and depreciation level. Thereafter, I'll be looking for the price to break the depreciation level, maybe further from this price appreciation level. Once the depreciation level is full, then we'll put our stop loss above this dumping zone, and we'll be looking for downward uh, trend, which will be targeting the collecting zone. But however, if the market turn its direction, break the appreciation level, break there, dumping zone after correcting, then we'll be looking for the next collecting zone, and I will be looking for a price to come back, touch the collecting zone, and thereafter look for momentum shifts the down to the upside and plot the appreciation and depreciation level. As soon as the new depreciation level is tagged and the price break there, price clutter, then we'll be looking for the entry to the upside. So that's that for gold for next week. Let us trade, let us make money.